Hi, welcome to the Market Alert for Monday, the 2nd of May 2016. So Friday, not too big of a range, but the volatility and momentum was enough to move most of the trades apart from one in the direction that they were actually signalled. So the background of the market for Friday, you can see in the pre-market session, very quiet. Fridays can be quiet, especially when there's not too much economic news as well. So here we see the market trading down first. This was a 23-point profit on this trade. Then gave up 18 points on the second one, third one back with 20, and then the same for the fourth one there. The fifth one never bothered with because it was getting late and the market was starting to look sideways. So not a bad day considering that it could have been fairly quiet. In the daily chart, you can see that there's some weakness around now, the market moving to the downside there, having failed to trade above the 62 and 76% retracement. It's a good indication. Notice also the increase in volume as well. This is indicating there is some selling around, but they could have brought the market back. I very much doubt it. This is just the plunge protection team just moving the market back to the upside in the early part of the evening session or the afternoon in New York. News-wise for Monday, it's Bank Holiday Monday here in the UK, so the markets are closed. This will allow the market in the US to move in one direction should it wish to do so. It's not uncommon during a Bank Holiday Monday, so looking at the daily chart that we've just seen, that I would expect we could see the market moving back to the upside there as well until everybody returns during Tuesday. Also, notice they're sending Dudley out at a very odd time. He must be abroad somewhere at 12:15 a.m. And then we get that same theme of the Federal Reserve reality show Tuesday, and also Thursday and Friday as well. We've got Bullard being sent out to speak as well. So a bit of a Federal Reserve reality show this week just to keep the market pumped. And not anything too major on the economic news front. That's probably why, apart from Friday, which is a big one, we've got the non-farm employment change, which of course was the reason for Yellen to increase interest rates in December. Implied volatility 1291, this increasing. We've seen the lows put in place. In my opinion, now we can expect more to the downside as the market has no reason really to move to the upside. There is absolutely nothing apart from printing more money that could actually move the Dow to the upside, and this is also reflected in the implied volatility. As I've said before, this is the most powerful indicator that I have ever seen. I've used it since 1993, since I uncovered it. If you go back and look at last year's market alerts for July, you can see how this information was used to show the 1,000-point drop in the pre-market session on August the 24th, and how it forecast the weakness in the market from that point, and also through from September as well through to January, once the Federal Reserve increased interest rates by 1/4%. So a very interesting picture here. We've not had these sorts of lows in the historical volatility, which is the blue line, for a very long time. So again, there is a big move afoot to the downside. And maybe we'll have to wait until Friday until that happens, when we get the non-farm pay figures. So we could then use sort of week of treading water and trying to hold the market on the highs. But once this goes, it will go spectacularly, that's for sure. Right, that's it I think for today. It's brief and to the point. If there's anything tomorrow, I will let you know during the day. But like I say, the rest of the world is closed, so if the Dow goes in one direction, it will probably tend to stay in that direction as a rule during bank holidays, but we can't always guarantee that, of course. So just keep that in mind. Right, that's it. I will see you in Tuesday's Market Alert. Have a great day and the remainder of your weekend, and see you in the next one.